G'day everyone, welcome back to Pete's Investing. Today's June 24, 2023. The Bitcoin update. We've got a bullish momentum on our weekly, bullish on our daily, and bullish on our hourly. And I'll go through some divergence that have been playing out and still in play as we speak. So on the weekly, first off, our triple moving average or the price chart, the CCI moving averages, and this new oscillator down here are all showing bullish signals, so predominantly bullish trades. You can see back here on the weekly we did have a bearish divergence during that period during the CCI, and that was in the same period between those two highs there with higher highs on the price chart. This was indicating a price fall and eventually did, and it eventually hit our target range, which was around down here on the Fibonacci range if you drew a Fibonacci range from that point there. On our daily, likewise, we had a few, or it's currently in a bullish momentum with all our indicators pointing upwards. It's also broken up through our resistance here at 37.80. Now in terms of where the next resistance may land, it's currently this minor resistance. I'm going to move that to that point there because that's currently building as a major resistance, but I'm going to leave it dotted for the moment as a minor resistance. But just moving back in a bit of history, again you can see here we had a bullish divergence on the CCI versus a bearish divergence on the price chart. We drew a Fibonacci and the price eventually broke through that descending trend line channel, so you would have gone long somewhere around there, and our initial target area would have been between the 50% and the 61%, which is that little rectangle there, and it hit that during both of those periods there. More closely, you can see there was a bearish divergence and a bullish divergence on the price chart. It would have entered somewhere on that bear candle there when it broke below the channel, and that would have been your initial target area if you drew a Fibonacci from that low to that high. I'm not going to draw the Fibonaccis again just to keep the chart clean. If you follow my videos, you understand how I draw the Fibonaccis and how I draw those price targets. Another bearish divergence on the CCI versus bullish on the price. Again, it would have broken below your channel, enter about there, and your initial target area, initial Fibonacci area would have been that point there, and it did hit it a few days later. Currently, there's no divergence long or short on the daily, but on the hourly, we do have this currently playing out. It's a bearish divergence on the CCI versus a bullish divergence. You can see there on the price chart. Now I will draw the Fibonacci's and how to enter it on this timeline because we'll be tracking it moving forward. So I'll just draw a little channel. It didn't work right. Let me just do that again. So we draw a channel down to the lowest candle within that divergence range, and then we draw a Fibonacci. So we'll bring it back to, it can be any one of these lows. It could probably be that low there, that low there. Let's bring it back to this low here, to the highest point there. And now assuming it breaks below this lower channel area, that's right on that 23% level. So let's pick the next target level down below, will be that area there. That's our initial target area. Of course it could go up from here, but if it breaks down below this channel, that's the entry point. That'll be your first target area. Now if this goes sideways for a while and eventually breaks somewhere here, then we're going to have the target area. I'll put another initial area. So let's say it drops out of the channel somewhere around there. That then exposes this 23% level, and that'll be our initial target area. So this is the target area if it drops suddenly down here somewhere. But if it goes sideways and drops down here, then it exposes and allows our first target area of the Fibonacci to be that point there. So that's where we're going to be tracking that in the coming hours. And also, as I said, we've got a short back test and a long back test here. And the way you enter those is, as I said, and as I always say, when all three timelines align, you trade in that direction. And the reason I'm showing you this is because this trades, we don't use stop losses, this trades throughout the whole period. So the way to avoid, for example, this current period where it was averaging down, you would have avoided that at that point because you can see on that there area, that was in a short environment on the daily, albeit it was long on the weekly, so you would not have entered that long during that period on the hourly. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also scan for stocks, weeklies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.